Have you ever noticed how price often reacts at round numbers? Levels like 100, 1.2000, or 50,000 seem to matter a lot. These are called psychological price levels. In this video, I'll explain what they are and why they work. Psychological levels are round numbers that traders focus on. They stand out because the human brain prefers simple numbers. For example, it's easier to think about buying at 100 than 103.27. That's why many traders place orders near round numbers. This happens in all markets: stocks, forex, and crypto. In stocks, it could be $50, $100, or $200. In forex, it's often levels like 1.2500. In crypto, it's numbers like 20,000 or 50,000. These levels often act like support or resistance. Price may slow down, bounce, or even reverse at these areas. Why does this happen? Because many traders are watching the same levels. Big institutions also place large orders near round numbers. This creates increased buying or selling pressure. However, psychological levels are not exact lines. They work more like zones or areas. Price can go slightly above or below before reacting. A common beginner mistake is treating them as perfect levels. Price does not stop exactly at 100 every time. Always look for confirmation from price action. For example, watch for rejection candles or strong momentum. Psychological levels work best when combined with other tools, such as support and resistance or market structure. The more reasons a level has, the stronger it becomes. Don't trade just because price reached a round number. Wait for price to show you what it wants to do. Think of psychological levels as areas of attention. They highlight where traders are likely to react, not where price must reverse. This mindset will help you avoid many bad trades. Quick recap. Psychological levels are round numbers traders focus on. They work because human behavior is predictable. Treat them as zones, not exact lines. Always combine them with price action. In the next video, we'll look at breakouts and false breakouts.